Hi, I am Anna. I come from www.ntvforex.com. Oh inflation, where art thou? Analysis. http ntvforex.com News ID 3AF1E2828 2025 12:45 AM NBSP. Asian markets today are digesting the implications of Federal Reserve Chairman Powell's Jackson Hole address overnight. The two key takeaways being that the Federal Reserve will allow inflation to overshoot its 2.0% target to get an averaging effect. Secondly, rates are going to be lower for longer and longer. The first is really an admission that the last 12 years since the GFC has not produced notable wage inflation, despite a booming post-crisis employment market. Almost certainly to be a similar case once we emerge from COVID-19. The second is an admission that the recovery this time is not going to be the nirvana-like V-shape so often postulated by the gnomes of the stock market. NBSP. Predictably, the U.S. yield curve steepened with 30-year rates rising more than the 2-year short end. That explains why banks led the Dow Jones and S&P 500 higher overnight. Banks make more money theoretically with a steeper positive yield curve. NBSP. Of course, that doesn't mean the Federal Reserve is going to tolerate structurally higher interest rates at the long end either. The US government has a lot of bond issuance it will need to do in that part of the curve to cover its eye-watering fiscal deficits in the years ahead. Assuming it gets its act together on that front. And a good bout of inflation globally is going to be about the only way the world will be able to deflate the government debt to manageable levels, aka Fed actions post-World War II. Sadly, this is not the 1950s where life was so much simpler, and the real challenge is how to generate the aforementioned inflation, without it becoming 1970s stagflation, the dark lord of economics. With that in mind, although not explicitly mentioned, we will almost certainly see the Federal Reserve following the Bank of Japan into some sort of yield curve control program in the years ahead. Short of dropping suitcases of US dollars at the doors of US citizens, the quantitative easing efforts of the Fed will have a declining marginal utility, especially as they had got nowhere near reducing their post-GFC balance sheet before COVID-19 hit. NBSP. Their inability to wean the world's economy of the opioid of 0% central bank largesse means, to my mind, that the spike in US rates will be transitionary, and a return to the mean lower beckons. In the near term though, it potentially sets up a short-term correction in the US dollar sell-off and precious metal. I expect the word inflation to be twisted by the FOMO gnomes of the stock market into another bullish signal. Inflation means company earnings rise, yes buy Mortimer, buy. With Mr. Powell's address out of the way, Asia looks to be easing into the end of the week. President Trump's Republican convention speech is in progress and could produce a few headline-driven short-term moves. Otherwise, Malaysia's balance of trade is the region's highlight today. Having posted a COVID-19 reopening bounce to mere 20.9 bio last month, the headline figure is expected to fade to mere 16 bio today, with petroleum product prices weighing on exports. With the US dollar slightly stronger on higher yields, pressure in the short term could weigh on the ringgit. NBSP. US personal spending data for July hits the wires this evening, with the core PCE index expected to rise 0.50% mom. Given the data looks back to July, and here we are almost in September, it is unlikely to encompass the full effects of COVID-19 sweeping the US Sunbelt. However, a negative reading may set up stock markets for a nervous finish and nip the incipient rise in US yields in the bud, as quickly as it started. Asian stocks like lower for longer. Asian stock markets have edged higher this morning after the Federal Reserve stated the obvious and said interest rates would be lower for longer. They have been led by after-hours US stock futures, with the S&P 500 E-mini and Nasdaq futures climbing strongly, both up by 0.50%, and Dow futures rising 0.60%. NBSP. Japan's Nikkei 225 is 0.40% higher, with trade-sensitive South Korea and Singapore both liking what they saw on the rates front from Mr. Powell. The Kospi has risen 1.30%, and the bank and property-heavy Straits Times by 1.50%. In China, the Shanghai Composite is 0.70% higher, although the CSI 300 and Hang Seng are unchanged, reflecting the legacy company nature of the former. Bank stocks do love a positive yield curve. A fall in commodity prices though has seen the resource-heavy indices in Australia set to finish the week on a sour note. The ASX 200 is down 1.0%, and the All Ordinaries has fallen by 0.50%. Overall, the news from the Federal Reserve was mostly expected, and will not structurally change the buy everything sentiment of global stock markets. NBSP. The US dollar falls in Asia, rising US stock index futures as the market ignores a steeper US yield curve for a more satisfying lower for longer narrative could torpedo my US dollar correction thesis before it started. Having eked out modest gains overnight as long-end US yields rose, the US dollar is in full retreat this morning in Asia. The dollar index has fallen 0.15%, with Euro USD, GBP USD, AUD USD, and USD JPY around 0.35% higher in Asian trading. Although the euro is mid-range, the other majors are now testing monthly resistance levels against the greenback. Sterling has risen to 1.3245, just below the 1.3280 level, the gateway to a further rally to 1.3500. AUD USD at 0.7290, is eyeing further gains if 0.7300 is cleared. NBSP AUD JPY broke in long-term resistance at 77.00 overnight, rising to 77.90 this morning. It has room for further gains to 80.00 initially and is perhaps telegraphing more substantial rises in USD JPY ahead. USD JPY is extremely rate differential sensitive, with the move higher in US yields leading USD JPY higher to 106.90 today. That is just below its 100-day moving average DMA at 107.00. It has not been above its 100 DMA since a brief spike in early June. A rise through 107.00 opens up further gains to 108.00. Its 200 DMA, in the first instance. Across Asia, a similar, if a more sedate pattern, is being followed. USD CNY, USD THB, USD SGD, and USD PHP are all 0.25% lower for the session. NBSP. The US dollar sell-off appears more driven by the rise in US stock index futures, than a great epiphany by Asia. Nevertheless, if the increase in US yields are snuffed out as soon as it began this afternoon in New York, the great US dollar rotation could find new momentum into the week's end, crushing my US dollar bullish correction view beneath it. Oil stays on summer holidays. Brent and WTI both retreated overnight, moving both contracts back into range, trading no mana-s land. A stronger US dollar and higher US yields capped price increases, with the coup de grace administered by the relatively uneventful passing of Hurricane Laura through America's oil heartland. NBSP Brent crude failed at its 200 DMA, today at $45.85 a barrel, on its way to a 1.40% fall to $45.010 a barrel. WTI fell 1.0% to $43 a barrel, although structurally it looks the better of the two, being well above its 200 DMA at $41.50 a barrel. The dramatic fall in U.S. crude inventories if the past month means that WTI is best placed to lead a topside breakout. Weak demand from Asian buyers has balanced out any benefits to be gleaned by a weaker US dollar today, with both contracts unchanged from their New York closes. The contango on the Brent futures curve continues to add a cautionary note for bullish traders, suggesting that short-term supplies remain abundant. The respective relative strength indexes RSIS are neutral, meaning oil could move either way from these levels, suggesting that crude's long hot summer holiday will continue into next week. Gold plays follow the leader. Gold prices retreated sharply overnight as U.S. long yields rose sharply. Gold fell by 1.30% to $1,930 an ounce in another volatile session. With the US dollar weakening and stock markets rising today in Asia though, gold has recovered some of those losses, rising 0.60% to $1,941 an ounce today. If nothing else, the overnight move by gold highlights just how sensitive it is to U.S. rates in the shorter-term horizon. Despite the large ranges seen intraday this week though, gold is now mid-range for the week between $1,905 and $1,970 an ounce. Gold's RSI is comfortably in neutral territory, hinting that the yellow metal could move either way and suggesting that more volatile range days lie ahead. Much will depend on the direction of U.S. yields in the 10-year to 30-year tenor. From here, gold could just as easily finish above $2,000 an ounce, as it could below $1,900. Gold's long-term bullish fundamentals remain solidly in place. What is becoming clear, is that upward progress will not be as linear as previously. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.